Welcome back to the Florida CME Group here in Chicago. I'm Killer. Got cash? I can help. Today's June 1st. Big day. Markets are moving down here. You can hear the buzz behind me. You know, we finally have seen this 3% yield. That threshold got violated. We've been talking about this. We've actually been talking about this on the CMZ, the cash money zone, for quite some time. Back when it was around 370. So we've seen a phenomenal move down in this interest rate in the 10-year. A complete grab in prices up. Inverse relationship there, folks. When the yield comes down, the prices go up. So you continue to see the grab in treasuries. We're not seeing the grab in gold today like we are, but all of this has been really exasperated due to the fact ADP, we had a weak number today, 38,000 prediction. ADP, how much merit do you put in that number? It's pretty much a wild card, but nonetheless, people are paying attention. But we really saw the market break down this morning after the ISM number. That ISM number came out at 53.5, pretty weak versus expectations. I think that was the look underneath the hood. Everyone wants to believe that the recovery is still going to be okay. We had a great earnings, profits are there at corporations, but obviously we're seeing this ISM number reveal some of the weakness, and they hit the S&P. And I've been tweeting. You can get me on my Twitter account @TheKiller. But I've been tweeting about this. The 50-day moving average, 1327.50 is where it's coming in today. It came down, hit it, bounced right off, and now it's trading about 1330. That 50-day moving average, I like to look at that, folks. It's been great for us because this morning we were trading about 1341, kind of in no man's land. And there's no reason to buy it there. Hopefully you were short, but there's no reason to buy it once it started moving down that 36, 33 until you got that 50-day. It gave you a reason to buy it. Underneath that is the 1322 weekly pivot, and finally underneath that is a 100-day moving average at 1312.50. If we get underneath that, all bets are off. But right now, the 10-year, we're seeing at 2.98%. I think there's going to be more stops, more buy stops to the upside, therefore depressing the yields even further. At what point, is this going to, bring this QE3 conversation back front and center? But obviously, the other side of that argument is that, the QE2 obviously didn't really work. So, how is Ben Bernanke and team going to figure out this problem? Because June 30th is only 29 days away. So Uncle Ben, hope you got a plan in place, because QE2, when that stops June 30th, you're going to have come out with something else. Obviously, you're not going to call it QE3, but you're going to have to come out with some other stimulus situation. If it's a job, we don't know, but there's something coming. You can feel it. Therefore, the 10-year went under 3%. So let's see the rest of the data this week. Obviously, Friday, unemployment, ADP, the holy grail of numbers. That will confirm if, in the event there's a weakness here, if that number comes out weak, they could really take this market down. Currently, Dow Jones right now is down about $1.50. So see how the rest of the day works out. Crude oil, it looks depressed at 103.44. Hope you've been following me on my Twitter. 103.44 has been an unbelievable killer ceiling for the last couple of weeks now. We went up and tested it yesterday, went up and tested it overnight, and have come off. So I think oil could be, you can see a little bit of a downward spiral here. So be short that crude oil if you can, if you get into the right entry. From the Florida CME Group, I'm the Killer. Have a great day, and remember one thing: be the hammer, not the nail.